Well, Tuesday the 2nd of November was anticipated as being an important Reserve Bank board meeting, and no one was disappointed that this was in fact the case. Firstly, the board decided to discontinue the yield curve control policy, where it was buying April 2024 bonds at 0.1%, which is the current cash rate. Secondly, the clause that we've seen in previous statements that the board expected that the conditions for the first rate hike were unlikely to happen before 2024 was left out of the statement. And thirdly, it was confirmed that the decision on quantitative easing will be made at the February 1 board meeting next year. So these two changes of policy I see as being a good time to change those policies. Yield curve targeting and setting a time frame for when the first rate hike would occur are unusually extreme policies. They're policies that are appropriate for the emergency setting of 2020, but now that the economy is recovering, inflation is rising, it's no longer necessary to have those extreme policies. Well, did we get any more clues as to where they now think the timing of the first rate hike will be? So the most important forecast change has been that the underlying inflation forecast for 2022 has been lifted from 1.75% to 2.25%, and for 2023 from 2.25% to 2.5%. So what that's saying is that the bank now believes that in the second half of 2023, underlying inflation will reach that 2.5%. Wages were also lifted in 2023 from 2.75% to 3%, but held firm at 2.5% in 2022. The Governor, in his associated statements, pointed out that he was still not confident that it would be before 2024, before rates would rise, but clearly those forecasts are now more in line with an expectation that rates will be higher in the second half of 2023. The reason why we expect that rates will be rising before the implied expectations by the Reserve Bank Governor are that we see underlying inflation lifting to 2.8% in 2022 and wages growth to 2.75%, while we see the unemployment rate falling to 3.8%. So we have a more upbeat outlook for the economy and for inflation, and as a result we're expecting that the Reserve Bank's forecasts are still too slow in terms of when we're likely to see the hike. But of course this all contrasts with the market, and the markets have now got around 3 to 4 rate hikes in 2022. Now the Reserve Bank Governor is quite dismissive of that, but now it becomes a forecasting game, and we think the Reserve Bank's forecasts are still too cautious, and that's why we have the first rate hike in the first quarter of 2023 compared to the implied forecasts around the RBA's new forecast of late 2023.